Most traders blow their first account. But what if I told you there's a routine that can flip the script and set you up for long-term wins? You don't need 6 screens or 10 hours a day to trade successfully. In fact, that's what's holding you back. So if you're a beginner, this is the only trading routine you need. 3 steps under 2 hours a day. So let's break it down. We'll also talk about common mistakes beginner traders make and what are the platforms and tools you need to know if you're looking to start trading on these stock market streets. So imagine this. You're walking into the gym for the very first time. You don't lift the heaviest weight right away, right? Trading is just like that. You need a routine, a structure that builds strength over time. So here's a simple 3-step trading routine that you can follow right now. So first and foremost, morning prep. We want to do about 30 minutes max. Check the pre-market movers using websites like FinViz, or you can go to your brokerage news feed as well. Look for earnings reports, major headlines, or Fed announcements if there are any. Set up a watch list of about 3 to 5 companies, ETFs or index funds, but be sure not to overwhelm yourself. The second thing is focus on the market open, okay? And this is around the first 90 minutes of the trading day. So the first hour of the market between 9:30 a.m. and 11 a.m. Eastern Standard Time is usually the most volatile. Also, the end of the day is too, okay? Watch how your stocks behave. Are they gapping up? Are they gapping down? Is volume coming in? Those are questions that you should ask yourself. Also, use a paper trading platform if you're just getting started. So platforms like Thinkorswim, which is a Charles Schwab product, or TradingView let you trade with like simulated money in real time. Okay? Now, number 3, in the afternoon, and this should take about 15 to 30 minutes. So whether you traded or just observed, the important thing is to start taking notes. What went well? And what did you miss? Build a trading journal. Trust me, literally that's your best teacher because it helps you to track what you're doing and what you're learning. And remember, you don't need to trade every single day. Some of the best traders sit on their hands and wait for the right setup. So, now, what I want to do is talk about the landmines that most beginners step on. First and foremost, trading without a plan. That is a big one. So if you jump into a trade without knowing when you exit, you're not trading. Literally, baby, that's gambling, all right? So ask yourself before every trade, where is your entry? Where is my stop loss? And where is my target? Where am I going to collect my check? All right? I need to know that, right? Another big mistake that people make is chasing the hype. That Reddit post about a stock, listen, baby, I need you to ignore it, all right? By the time you're reading about it, the early birds have already eaten, okay? They full, all right? They full. So stick to your plan and ignore the noise. Also, ignore risk. This is huge. This leads us into the next topic, but many beginners risk too much on one trade. So I'll just go all in on this one, okay? Because I got a good feeling this is how a lot of accounts go from 1,000, 2,000, 5,000, whatever it may be, to 0. All right? So let's talk about this. So overtrade. You don't need to trade 20 trades a day. All right? Even 1 or 2 good setups a week can literally grow your account if you're consistent. Also, understanding your risk. All right? Risk versus reward is everything. So let's break this down like you're ordering at a restaurant. So you walk in and you see 2 items on the menu. Option A, you spend about $10 and you have a 70% chance of getting $20 back, okay? Option B, you spend $10 and you have a 10% chance of getting $100 back. Which one you gonna pick, all right? That is risk to reward, okay? So great traders choose setups where the reward outweighs the risk. Usually, I like a 3-to-1 ratio, all right? That means if you risk $50, you want to make $100 to $150 if you're right. Okay? So here's a simple rule to follow. Okay, I'm gonna make this real simple for us. All right? Never risk more than 1 to 2% of your trading capital on a single trade. Never. All right? So if you have $1,000 in your trading account, don't lose more than 10 to 20 on any trade. That way you can be wrong 10 times in a row and still be in the game. Also, know your risk tolerance. Are you okay with seeing red in your account for just a few hours or days? Or do you panic at the slightest drop of red? Okay? There's no right answer, but your trading style should match your emotions. Alright? So, now, let's talk about opportunity cost and how to evaluate the best investment decisions. So, it's a fancy way of asking, what are you giving up by choosing this over that? Okay? In trading terms, if you put $1,000 into stock A that grows 3%, but stock B grows 10% in the same time, you didn't just make 3%, you missed out on 7%. That's an opportunity cost in action. All right? So this matters because every dollar you invest is literally a choice, and every choice has trade-offs. So, should you hold cash or should you buy a stock? Should you swing trade or should you trade for long term? Okay? To evaluate better decisions, always ask, is this the best use of my money right now? Okay? Is my money tied up in something with a low potential while better options exist? What am I giving up by staying in this trade? You won't always get it right, but thinking in terms of opportunity cost builds a sharper, more strategic mindset. Okay? So now, I want to talk about behavioral finance and how emotions, yes, emotions, influence investing. So, have you ever panicked and sold when the market dipped and then regretted it later? Listen, I have, right? We have all been there. So, behavioral finance is the study of how feelings mess with our financial decisions. So, two of the biggest culprits of this are fear and greed. Fear shows up when markets crash. You want to get out fast, okay? Immediately, exponentially, quick, right? So greed kicks in when prices skyrocket and you buy at the top thinking it'll go higher. This emotional roller coaster leads to classic mistakes, buying high and selling low, all right? Overtrading is also a thing. Chasing hot stocks is also a thing. Ignoring your plan because of news or hype is also a thing, okay? So, in order to beat this, you can use a trading journal, okay? Remember I talked about that. You can use a trading journal. So, write down why you entered into a trade, what you felt, and literally how did it go. Over time, you'll see patterns. Maybe you'll always panic sell when a stock dips 5%. Or maybe you have FOMO into risky trades after watching Twitter. Or actually it's called X right now. Alright? So self-awareness is your secret weapon. Master your emotions and you'll make better decisions. Even when the market is crazy like it's been lately. Okay? So what are some things you should focus on when you're trading? So in the beginning, traders often chase literally everything. News, signals, Reddit, threads, indicators, and trust me, it is chaos, all right? So what's the real question you should focus on? There are three big things, okay? So let's talk about this. Number one, risk management. So before you think about gains, protect your capital. Use stop losses. Never risk more than 1 to 2% of your account on a single trade. Number two, make sure you have a repeatable strategy. This could be momentum, swing trading, option selling, whatever fits your style. It doesn't matter. The key is to test it, journal it, refine it, and then master it. All right? Also, your psychology. Markets are 20% technical, literally 80% emotional. So learn when you tend to overtrade, revenge trade, or freeze. Your mindset literally is your edge. Literally, okay? Can I say that enough, all right? Also, block out the noise. You don't need to follow 100 stocks. Start with a watch list of 5 to 10. Always remember, focus equals clarity and clarity equals confidence, okay? So, let's talk about some essential financial tools for trading in the stock market, all right? Because A good trader with bad tools is literally like trying to win a race on a flat tire, and we can't do that, all right? So here are some essential tools the U.S. market traders use in the different brokerage platforms that they have as well. So let's talk about thinkorswim first. It's packed with charting tools and paper trading. Webull is modern, sleek, and great for technical traders. Charles Schwab is a good one, and that's actually thinkorswim's. And Fidelity is a little bit more traditional, but rock solid, okay? Then we also have different charting software. TradingView, which is popular for clean visuals and a huge community. TrendSpider is great for automated analysis and backtesting, okay? We can also look at resources to help us to understand the news and the sentiment of the market. So FinViz is a great one for a screener for stocks with filters like volume, RSI, sectors, etc. Seeking Alpha or Yahoo Finance is really good for stock news and analyst opinions, okay? Another thing you might want to watch is economic calendars, all right? So websites like investor.com or Forex Factory, they track key events like interest rate decisions, inflation reports, and jobs data, okay? Also, position size calculators are helpful too. So tools like MyFXBook are browser-based calculators help you to manage how much to trade based on your risk, all right? You can also use trading journal tools like TraderSync or even a simple Excel or Notion table. Tracking your trades makes you think like a pro. This applies even if you're just starting. So the goal is not to have the most tools, is to have the right ones, okay? That supports your routine as well as your mindset, all right? Okay, so now let's talk about the trading terminal, okay? So imagine you're a pilot. You wouldn't fly a plane without a dashboard that shows you your speed, your altitude, and your fuel levels, right? So that's what a trading terminal is for you as a trader. It's your cockpit, giving you real-time data, charts, and tools to make informed decisions. In the United States, popular trading platforms like Charles Schwab, which has the thinkorswim platform, Interactive Brokers, and TradingView offer robust trading terminals. So here's what you can expect from a good trading terminal. So first and foremost, real-time data. So watch stock prices update live as the market moves. You also will get charting tools. So you can analyze trends with candlestick charts, moving averages, and various different technical indicators. You can also have order execution, so you can place market orders, limit orders, and stop loss orders swiftly. News and alerts. This is key, all right? So stay updated with the live news feeds that can impact your trades. You can also customize some things, so you can tailor your dashboard to focus on the stocks and data that matter to you most. So mastering your trading terminal is essential. The more comfortable you are navigating it, the faster you can react to market changes, making you a more effective trader. So now, let's talk about the regulators, all right? These are the guardians of the capital market. So, have you ever wondered who keeps Wall Street in check? So that's where regulators come in. So in the U.S., the major players are the Securities Exchange Commission, all right? They're no joke. The SEC ensures that companies provide accurate financial information and that investors are protected from fraud, which is so important in this space. They are the watchdogs that keep the market transparent. Now, we also have FINRA, okay? So FINRA is the Financial Industry Regulatory Authority. FINRA oversees brokerage firms and ensures that they follow fair practices, which is also important. They work to protect investors from malpractice. Key. We also have the CFTC, Commodity Futures Trading Commission. So while they're more focused on commodities and futures, the CFTC also plays a role in ensuring a fair playing field in parts of the market. So these regulatory bodies are like referees in a game. They enforce rules, investigate wrongdoing, and help maintain trust in the market. Without them, the stock market could become chaotic and literally unfair. So, next time you're trading, remember that these guardians are working behind the scenes to help keep things in order and to prevent chaos from happening. All right? So, Let's wrap things up now with one of the most powerful habits that you can adopt. It is the weekly review of your trades. So think of it like reviewing game footage after a big match. You want to know what worked and you want to know what didn't work. So here is a simple way to do it. So I'm going to go back to that journal concept I talked about earlier, okay? So be sure to write down every trade that you make. Note the stock, note the entry, as well as your exit points, your reasoning behind taking that trade, and how you felt while you were in it, okay? Analyze your performance. Look at your winners and your losers. Ask yourself why certain trades didn't work out while others did, all right? Learn and adjust. Identify your patterns. Are you overtrading? Did you get too emotional when a trade goes against you? Use these insights to adjust your strategy. Also, set goals for the following week. So based on your review, set a couple of actionable goals for improvement. Maybe it's tightening your stop loss, or maybe it's sticking to your trading plan literally no matter what happens. A consistent weekly review not only helps you refine your strategy, but also keeps your emotions in check. And over time, you'll start noticing improvements and your trading decisions will become more objective and data driven. So that was a power packed trading blueprint for beginners. So if you follow these steps and you stay consistent, you're already ahead of most of the newbies out there, literally. So if you found this helpful, hit that like button and subscribe, and let me know in the comments what's one thing you're going to add to your trading routine this week. Until next time, trade smart, stay calm, and keep leveling up. Let's get it. I'll see you in the next one.